Joining us now is John Plassard, who is partner head of investment strategy at Cité Gestion. John, I want to talk more about the market and the reaction to France from here, because we were looking like we were in cruise control this morning and not really moving anywhere fast with no real direction. But we've now sold off aggressively on French stocks. We've seen the yield spike, euro's under pressure. Is France and the stock market a clear sell for you this morning?
No, and I think, Karen, that in fact Moody's is going to downgrade the rating of France at the end of this month as well. So it's going to put pressure, of course, on the country. Can you imagine that since the government dissolution in June 2024, so let's say 1 year ago, there has been 5 prime ministers in France. So we have never seen that situation before. And we know that the left wing, the far right, and even the French government coalition isn't willing to take any decision in the coming weeks. Even the street, if I can say that, you have persistent strikes, growing public anger over austerity and spending cuts. So it's ungovernable, and I will say that if you look at the spread between the French and the German Bund, you will see that we will soon reach the 100 point, and this is something very dangerous for France.
Good point, isn't it, John? We just discussed the various different scenarios from here, the options that confront Macron. What do you think would be the worst case scenario for markets?
I think the worst case scenario will be that Mr. Macron will choose to resign. I don't think he wants to do that, but I think that will be the worst for the market, of course, because I don't think the Socialist Party and even the far right wants to govern this country. Actually, they want to wait for the official election. So that will be the worst case scenario, I think, but I don't think he's going to resign.
So how does this play out for Europe more broadly here? Over the last week, we saw European outperformance versus the U.S., but that whole Europe versus U.S. trade has certainly come to a halt to a large degree since the start of the year. Some concerns around execution risk, around this increased spending from Germany, for example. So how do you see Europe versus the U.S. playing out overall?
I think that's the last time we spoke together a month ago. I was telling you that we might see a catch-up from the US in the second part compared to Europe in the second part of this year. That is going to be the case. If you look at the immediate reaction of the euro against the dollar, you see that people are coming back on the dollar. That is not in the consensus, and I think that all the teams surrounding the artificial intelligence, etc., coming from the US will be, of course, something that people will look at and leave, I would say, France on his side, and focus on other countries in Europe, Germany and Italy. You were talking about it just before, but leave France with his political problems.
So you think there is a world in which investors do differentiate France and leave France behind, but Europe overall remains in favor?
Yes, because, the debt brake, we have been talking about it in Germany, was a game changer for the European economy. I think that the investment will still be there in 2026, especially coming from Germany. We see that some growth could pick up in China. China is the main partner of Germany, so that could be also something that is positive for Europe. And last but not least, we know that actually the taxes, the import taxes is 15%, so it gives more clarity, I would say, for for some of the European countries, if you take out France of this equation.
Jean, very interesting. I'm looking at French assets, and some of these shares have absolutely skyrocketed this year. Indeed, including today's move, Cité Gestion has pretty much doubled in price this year. What should we be doing with the French banking sector at the moment? SocGen's down 7% today, BNP 5.3%, Crédit Agricole down 5% exactly as I speak, but they've all rallied hard off their lows. What should our viewers be doing?
I think that in this climate of instability with Lecornu resignation, so it could be seen as a breaking point of the cyclical politic paralysis. So it means that people, we're given some credit, I would say, for the French banking stocks. I don't think it will be the case anymore. There are too many uncertainties. I think that really, as I just mentioned before, people will look at the Spanish banking sector, for example, that made a good run as well, the Italian and of course the German one, and leave France with its instability and volatility.
John, there's those of us out there who, when we looked and lived through the sovereign debt crisis, 2008 to 2011, believed that actually it wasn't just Italy, Ireland, Portugal, Spain, amongst others, who should have suffered. Actually, France was in just as bad a position. Those countries, by and large, have repaired their finances as well. Are we on the cusp of another leg of the European sovereign debt crisis?
Yes, maybe, but Steve, since the Second World War, France has already had the same issues. It's a collapse of the government, impossible to govern this country. Nobody's agree with anything. So I think that it's business as usual, if I could say, even if actually it has been quite historically, as we said, there has been 5 prime ministers since almost 1 year. But I don't think it's a game changer for Europe. I just think that now, when I was talking about diversification, the 3D, diversification, it means that people will even more diversify in Europe, and looking at other countries that could be interesting and that didn't have the same run as France in 2024. So I think this is the case, but I don't think it's a game changer for the Eurozone.